Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's May 29th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. You know, I'm not sure if you could find a worse sector to invest in since 2011 than mining. It's been a total disaster, where just about every company in the industry has gotten smoked. And we talk about an industry, a cyclical industry that's been depressed for 7 straight years. It's just been brutal, completely brutal for investors. And being honest here, it's difficult to see a short-term catalyst. It's going to make this sector favorable again. Long-term, it's cheap, it's crazy. But let's be honest here when it comes to mining. It is one of the crappiest businesses in the world, right? You have your big producers whose margins are pretty low, considering all-in costs are around 1,000. Some of them say 900, some of them say 1,100, but around 1,000 on average, depending on the producer. You have gold prices around 1,250, 1,270, 80 around there. So, I mean, the margins are not that great considering, these are the big guys. They're blowing up mountains. I mean, I saw a lot of these projects. I mean, Cortez in Nevada. I mean, unbelievable what Barrick is doing there. You'll see like half a mountain blown up, these massive trucks. I mean, you talk about the employees they have. Newmont has over 12,000. This is, pre-Gold Corp who they're taking over. Barrick has over 17,000 employees. It's a very capital-intensive business. Raw material costs are a big factor. They can go up to the point where it's adding another $100 to your all-in costs, like the next quarter or 6 months later. And inflation, there's so many things involved for, it seems like such little margin. But when I look at these names, even the big producers, I mean, Barrick is trading at $11 right now. It was $50 in 2011. Newmont Mining was $70 in 2012. It's trading around 31. Name that I like. I mean, from 70 to 31, actually, that's not that terrible. It might be one of the best performers. And that's, down a little bit more than 50%. That's how much some of these companies got smoked. You look at Gold Corp, another company trading around 11 today. It was $55 in 2011. You can see why there's so many large cap mergers taking place right now in the market. This makes sense. These things are trading at significant discounts to where they were 7 years ago, 6 years ago, 3 years ago even. And when you look at the mid-tier producers, like the Yamana Golds, Eldorado, AIM Gold, I mean, life is really, really tough for these guys. And these mid-tiers have higher costs. Their balance sheets aren't as strong. Have to be careful what projects they choose to invest in, drill, because their margins get lower than the majors. You look at Yamana, that was a $20 stock. It's now below $2. Eldorado was over $80 a share in 2011. It's $3 today. This is common. EM Gold was $22 in 2011, and it's now under $2.50. That's the mid-tiers. I mean, you get to the junior miners, whole different story. Forget about it. And most of these guys own projects that can only be produced at $1,300 plus gold prices. I might be conservative there, but unless you see gold go to 15, 16, 17, and they go to 1,300, doesn't mean, wow, let's develop this. No. I mean, they could fall over, it was 12, 15 years to develop a mine. I mean, they could fall considerably. You'd like to have that cushion. Hey, $5, $16, $1,700 gold prices where a lot of this makes sense to start developing $13, $15, $1,400 projects, where that's the break even if they develop that project over a certain amount of years. And when you throw in the fact that only one, and this is a Rick Rule stat that I love, 1 in every 3,000 gold projects goes from that early stage development to actual producing mine, 1 in every 3,000. So to put that in perspective, guys, the next time you go to a junior mining conference, you look around at all those companies. There'll be a few hundred there. Sometimes there's 1,000 there, depending on what conference, and the PDAC and stuff like that is one of the biggest. But you got to figure 85% of those companies are probably not going to be around 7 years from now, 8 years from now. So those things, listen, they're going to raise a lot of money. They're going to develop. I get it. I understand it. But man, it's going to be really tough. Most of those companies are not going to survive. Doesn't mean you can't make money on them. It's like investing in biotech where phase one could be great, phase two could be great. You can make hundreds of percent, if not 1,000% gains, and then maybe they don't get to phase three, and you see that same thing in different stages. It's pretty crazy when you think about it, you look at the numbers. You look at management teams for the junior miners, they basically do, early stage permitting, testing, drilling in an effort to find, a higher grade gold and a property that can be scaled, right? Scaled is a big name in anything that you're going to invest in early stage. That's what they're looking for, high grades and scalability. But if you're looking at the majors, right, and where they are today, they don't have to take on the risk of buying these early stage projects right now. Considering you could buy a major producer trading, 75, 80% discount to its 2011, 2012 valuation? So a lot of these junior miners, again, they have that intention on, well, basically no intentions on ever developing that project to where it's actually going to be a producer. But when you see these long, drawn-out markets, you're just sitting on their hands. Most are running out of cash. They're forced to raise money using crazy deals, 5-year warrants, which sometimes can be a short seller's dream, right? Because what do you do as a company is you're approaching people to raise money. Also, the investment bankers, they know, especially in Canada, which companies need to raise money, and they'll call them. And when they decide they make that phone call, what do? Well, if they think that, hey, they might they might raise money through a particular firm. I mean, there's a lot of backdoor stuff that happens in this industry. And if you could find out a company is going to raise money or they come to you, you could short it. Again, illegal. It would be inside information, but there's a lot of shady things that happen. But you could short it. If they come to you at $1, you got to raise money and you want to raise significant money, it's going to be probably at 70, 75 cents. So you short them, make sure they offer 5-year warrants. You get into the deal. You can sell out the initial stake. You have the 5-year warrants. You shorted the stock, and now you make the spread, which is a no-risk proposition because you're long and short. You're long for the free warrants that you got for 5 years, and you short the stock, and you just, capture the difference, taking your money out, and now you can invest in other things, and you're liquid. It's a simple explanation, a simple example, and it's more detailed than that. But when you're offering those warrants and you're going to the market right now, a very depressed market, super bear market, it's difficult to raise money. There's a reason why a lot of these junior miners who raise money using 5-year warrants are down more than the overall market. It's crazy. Not saying it's a bad thing. Market comes back, hey, come back 2 years, 3 years, fine. These things are going to, from these levels being down 80, 90%, guys, the upside, if the trend turns, it could happen 5 years, 10 years from now, it could happen next year. You don't see 100% gains. You see thousands of percent gains in this sector. Again, it's been costing a lot of people money. And, for us, we hit a couple of stops trying to pick away at this industry, which we're fine with because the upside potential is that great, 300% more easily. But it's just been depressed for such a long time. It's crazy. And for me, I feel really bad because I have so many friends in the industry. I travel these conferences, speak a lot of these conferences. A lot of these guys live in Vancouver, which is considered the mining capital of the world. I know a lot of these guys work hard. They continue to move forward, developing projects, raising cash, try to buy projects on the cheap. But even that's difficult, right? Since most of the acquisitions in this space, they're not done using cash. They're done using stock. That's the currency. And with their stock prices down 80% plus from their all-time highs, you're looking at their market caps going from maybe 500 million to under 100 million, 70 million. It's not that easy to really use your stock as currency now because your valuation is much lower. But in this sector, guys, even if you have a great management team, a great project, operate in mine-friendly jurisdiction, and even have enough money on your balance sheet to fund your company for the next 2 years, which is a pretty long time, especially in this industry, it really doesn't matter. Because this is the worst bear market in at least 4 decades for gold. And that's not coming from me. That's coming from the guys who've been in this market that long. And they've said that publicly. It's kind of like the credit crisis where you look at these stocks, early 2009, close to 20% of the stocks in the S&P 500 trade in the single digits. The only way that happens is if something is super duper depressed. I'm sure that number is probably less than 2% today. But that's when you get good deals. That's when you're able to get warrants and structure different deals, again, in this type of market to lower your risk. And to make matters worse with the gold industry, you have Bitcoin. which Bitcoin argues a currency. I would argue it's more of a currency than gold, considering I could pay for travel using Bitcoin. I could pay for food at some places, credit card processors. Some of them accept Bitcoin as payment. It's a global currency. Now it's back over 8,000. In fact, closing in on 9,000 Bitcoin. It's up over 100% of the year compared to a market where, hey, we're up around 10%. It doesn't feel like that. But remember, we fell 20% from September through December. So we popped up in January, February, March, Mr. April, and now we have a lot of trade tensions and a lot of risk in the market, which I'll get to in a minute, educational segment. But most of the major markets around the world are really not performing well, seeing much slower growth. And yet you have Bitcoin doing well. And this time I'm going to tell you guys, it's different when it comes to Bitcoin and the crypto markets. I said in the past that 90% of the ICOs are completely worthless, saying it for a while. So 10% or so, screening through 150 to 200, I was able to find maybe a dozen, 24 good names. And some of these were recommended in Crypto Intelligence, our newsletter, and they're doing very well right now and up a lot. And one of those names is Binance Coin, up 100% for us inside of a few months. And guys, ICOs, remember, right? These are utility tokens. Utility tokens are used for products and services usually available through the company's site. That's their value. So if you don't have a running site or any traffic going to your site, which is the case for more than 80% of these companies right now, utility tokens, these coins are basically worthless. You're not getting an equity stake in this. People still do not understand that. A lot different from security tokens are what we offered. What does that mean? It means if Microsoft comes in and buys, say, Binance Coin for $10 billion, you get nothing as a token holder. That doesn't represent an equity stake. Utility tokens just gives you the right to use goods and services. Now, for Binance, which has one of the biggest trading platforms in crypto, there's numerous uses for this token. I mean, you could use it to get discounts and trading fees, use it to purchase a house through a site they partner with, use it to pay the bills in nightclubs in Vegas, buy virtual gifts. I mean, this company signed so many deals with so many companies where their token, their coin can be used as payment. That provides value to the token. Again, not a lot of companies like this. Most of them, 85%, are worthless. But you look at Binance, they're burning 20% worth of their profits every single quarter, which is a lot of money considering they have one of the biggest trading platforms and generate a shitload of money. When I say burning profits, they're taking the profits and burning the tokens of 20% of the profits. Now, what does that mean, burning a token? It's similar to buying back its shares. So Binance plans on burning 50% of the total outstanding tokens they have over the next, I think it's like 10 years or so. And every quarter it amounts to around 20% of their profits that they'll take out and they'll buy back their token. And then they say that they burn them. That's what it's called, which reduces the amount of tokens, making each one worth more. And Binance went even further to announce a new lottery system. I'm not just promoting, I'm just showing you how there is some value, but you have to spot it, where they launched this new Binance Launchpad platform, which new issues come out, and they do a incredible job of finding a due diligence process. I'll get to in a minute. But they have like a lottery, and it used to be on a first-come, first-served basis on who gets the opportunity to invest in these things when they first come out on this platform. And Binance said, wait a second, instead of doing first-come, first-served, we're going to have a lottery. And that lottery, those tickets, is now based where the more tokens you hold, the more coins you hold, the more lottery tickets you get, which increases your chance of being able to invest in some of these deals. I mean, it's kind of like having a $50 million account at Goldman, and every IPO they underwrite, you're going to get a phone call, and you're going to get a piece of. The more tokens you own, the better shot of that happening. That's smart. That's using a token. You're seeing that automatic burn. We're up well over 100% on that in the last few months. What I'm seeing in crypto, guys, is definitely different. And when I say different, I mean for the better. Because a lot of BS is getting cleaned up. There are a few dozen utility tokens that have value, huge upside potential, which are tough to find, but we've been doing this for a while now and have great sources out there, which helped us really rein in the risk of our crypto newsletter, Crypto Intelligence, as times are really bad through 2018 and into 2019. And we didn't recommend anything for months. We only had 16% of our capital at risk when you saw Bitcoin completely crash And all cryptocurrencies down 70, 80%, which was good. And over the past few months, we've been nailing it. I'm happy to see subscribers making money because I did get some shit from subscribers, which is understandable. Since people paid a lot of money to subscribe to this product, and I wasn't recommending a stock every month, but I was providing great educational content. And I get it. I get it. If you look at subscribers out there and they subscribe to your product, what do they want to do? They want to become rich. They want to make money. They want to make money in the market. They want to follow someone that they trust, and I get it. But that's not the most important thing for me. The most important thing, and the reason why I've been doing this so long, is because when times are bad, my job is to try to protect you, to limit that risk. And we've done a great job here. And that cost me a couple of subscribers. Saying, hey, I thought you were going to recommend. I'm not going to recommend stuff if I know you're going to lose money on it because it's a terrible market. I'm not going to do that. And now the performance is doing great. We were very patient. We really analyzed some great situations, getting some great ideas from our sources in the industry because, again, we launched our security token. We have a lot of great contacts out there now. And the performance is doing better. But my job first is to protect you, to try to make sure that, hey, we want to limit our losses because we're all going to be wrong sometimes. Every one of us. I mean, you could analyze a stock, anything. It looks perfect on paper. It looks great. Checks every single box, and the thing's going to go down 25, 30%. It just happens. It happens to everybody. It happens to the greatest investors in the world. But the greatest investors limit their risk. This way, they always have money to invest long term. And now this newsletter is performing great in a market that's, even in global markets, that's been terrible. But getting back to my point here, I'm seeing some amazing things in this industry. More regulation. You got the bigger players, or even the big exchanges, and they're not accepting every token, every coin, willing to pay them to go on their exchange, which, once they raise money, it's pretty easy to give someone $100,000, $300,000 if you just raise a few million. And there's a detailed screening process. I know we're going through it right now with our Curzio equity owners token. Lots of investors in it, raise money. It's great. I plan to have it trade on major compliant security token exchanges like T0, Open Finance, and even Binance, who launched their own security token platform. But there is a detailed screening process now, which is awesome. You look at the lawyers in this industry that have much more experience compared to 18 months ago. And even a year ago, many of these guys had no clue. I saw, friends who raised money and they just structured their token wrong. They got nailed with taxes and had a utility function with a security function and all over the place. It cost them a fortune because they're the lawyers. It's different now. A lot of these guys have more experience. 12, 18 months, lawyers just jump into this industry saying, wow, look at the billions being raised. Let's take a percentage of it. Well, try to do a little homework on the industry first, before you screw everybody. It's much better now. Help you have a good, clean offering if you use the right lawyers. You'll see major companies like Amazon, Microsoft, JP Morgan launching their blockchain platforms using the Ethereum network. And guys, it's the biggest companies in the world. Amazon, Microsoft. It's $1 trillion market caps. JP Morgan, biggest bank in the world. These guys are using the Ethereum network. It's for real. Then we have the digital token market, which is starting to explode. A record amount of digital security tokens. And it used to be called security tokens, STO, but that record amount launched last quarter. And the first two, and guys, please listen to this because this is important. The first two will go free trading this quarter on the Open Finance platform. What does that mean? It means you don't have to be an accredited investor to invest in these things. You could be non-accredited. It's going to be open to everyone. Remember, our STO, or digital securities, is only available to accredited investors. That's the way it has to be since security. Everybody that comes out with a security offering in the U.S., it's got to be non-accredited. It's got to be held for, I believe it's around 12 months, and there's a way to shorten that up, but it has to be available to non-accredited investors. To accredited investors. And that pissed off some people who wanted to buy our token because they want to invest that are not accredited investors. And I get that. But 12 months from now, it's going to be available to everybody. Hopefully, we'll be trading on lots of exchanges, which things are looking very good. Our company should trade based on the growth of our company, similar to a stock. And again, it's a security. This market's on fire right now. Record amount of STOs launched in the first quarter, which are 47. You're going to continue to see this number go up each passing quarter. But 1 year from now, these 47 that were announced and raised money last quarter, 1 year from now, these are going to go free trading. Non-accredited investors could buy these things on crypto exchanges. So now let's look 2 to 3 years out. Now we're talking about hundreds of them will be available for non-accredited investors. Talk about a whole new market. Likely thousands over the next 5 to 10 years. This is one of the best ways to raise money compared to doing a major IPO, which costs a small fortune. You could do, simple IPOs on the Canadian exchanges at a low valuation or whatever, but you can't really do it here. Otherwise, you're going to trade the pink sheets, which is nonsense. Market nobody cares about. If you're going to be on NASDAQ or New York Stock Exchange in order to get this thing underwritten and get on these things, it's going to cost you a fortune. And they want to see like the massive growth potential, sales, probably more than $5-10 million. It's not easy. Or you could do a traditional private placement where investors, what's your liquidity period? At least 7 to 10 years before you get your money back. You're locked up. That money's locked up until the company either does an IPO or they get acquired. That takes an average of 7 to 10 years. But I truly believe Bitcoin, if you look at it, it's definitely claiming a lot of gold investors who like to speculate in junior miners. I know there's gold bugs out there. Feel free to email me. They're going to call me crazy. FrankCurzioResearch.com. That's cool. I'm not telling you to sell your gold and buy Bitcoin either. After all, gold is still a $7 trillion plus market where Bitcoin is what? About 150 billion? But when you truly look at the reasons why people buy gold, or the reason many gold bugs convinced you that you need to own gold over the last 10 years, you look, one is for safety, and it's definitely not a safe haven. It hasn't been for a long time. Just look at the market. The market's crashed, gold crashes. Gold stocks crash, prices come down. It's not really a safe haven. Treasuries are the safe haven. Look at the yields today crashing with all the risk in the market right now. There's tons of money flowing into treasuries. You buy gold to protect you against inflation, which Bitcoin kind of be used for the same purpose. I'm not sure we're going to see inflation anytime soon since our government spent trillions to try to inflate the market since the credit crisis. And it really hasn't worked if you're looking at the CPI. Invest in gold because it's, hey, a currency. The US dollar is going to disappear. It's better to invest in gold. Yet, you can't really pay for anything in gold. Well, most things. You can't carry all of your gold on a plane from China to wherever or from here to whatever. You can't do that. Bitcoin provides a way for you to transfer money anywhere right away. You use it to pay for so many different things. But I can see Bitcoin from an investor standpoint being a better option than owning gold here, especially since the gold market, I mean, a lot has to do with sentiment, right? It's been horrible since 2011. There's zero excitement. There's like zero innovation in this industry, a little bit coming with AI and stuff. It just makes it difficult to hold something when there's no news and it's crashing when all the markets are up pretty much a lot more than gold since 2011, 2012, especially the US markets. So I see investors exploring other options or maybe putting a percentage, maybe 10, 15% of their gold portfolio into Bitcoin. I think that's happened. I think that's hurt the market. And ranting about the crypto markets for 18 months saying they need more compliance. People need to know their money is safe and insured. Where Binance got hacked several weeks ago, someone stole 40 million from investors. Saying it was an inside job, but they admitted fault. They covered all the losses, they made good, with their own funds, significantly increased their security. And that's the way it needs to be, right? I mean, if something like this happens, people need to know that they're okay, that they're safe, that they just didn't lose money. Because if Binance didn't make good on that, again, you talk about a platform that generates hundreds of billions of dollars over the past few years in profits. Hey, these guys have to cover their losses if something like this happens. And you get to be better. Remember, this is a new industry. You're going to see a lot of this crap happening. You want to get stronger, but you want to see more compliance in this industry. And they did the right thing. And they probably didn't lose so many people off of their platform, which is important. So definitely making strides in the right direction where I see a digital security token market really taking off in the years ahead. And guys, do me a favor, get educated on this now. Doesn't mean you have to look at our token, Curzio equity owners. I'm not pitching anything here, because if you get educated on this right now, and there's a way to actually do that because we created a site. But more to the point, you listen to this podcast because you want the real story, because you guys trust me, right? Well, for me, when I look at this industry, I base my company on this trend. That's how much I believe it. So I put my money where my mouth is. That's how much I believe in this. And we raise money through our own security token. It's been great thus far. I have lots of investors. And you know what? For the first time, investors, the very first time ever, have an equity ownership in a financial newsletter publisher through a security token. And trust me, if you're even a 30-year vet in this industry, you have a big name, you've been doing it for a long time, have amazing credentials, it's nearly impossible to own equity in a financial newsletter publisher space. It's just impossible. And it kind of sucks because it's one of the most scalable, high-margin industries you'll find. And now we offer that to our subscribers. We have to execute now. We have to do a good job. There are tons of risks, just like with every business. But we're happy with things are going. They're growing. Things are awesome right now. But we chose security token market because it's just better. It's cheaper. And you know what? I said earlier, I want you to start learning about this, about digital securities, and you can do that for free. Again, not pitching anything here. By going to our site, just go to Curzio Research and click Token Tracker. That's our dedicated site to stories about security tokens. You know everything that's going on in this industry. So we pull out these stories from the best digital security sites out there. So it's really a great site, a great starting point just to see, because you're not seeing that. You're seeing trade and all that stuff, the trade wars. You're not seeing a lot of security tokens. It's amazing how many institutions, how many great people, how much money is being raised. I think it was $350 million last year, only from April or May for 2018 through the end of the year. And now it's even picking up further because this makes sense, this market. It's give you access to illiquid markets for the first time without having to go through these brokerage firms. Again, if you want to think brokerage firms and how they screw you, look at not Alibaba. Look at the two ride-sharing companies, right? Lyft and Uber. The ride-sharing market is on fire. It's a major growth market. The numbers are unbelievable. I know, I analyzed them. It doesn't mean you should buy these two stocks that they inflated the valuations for. Again, when they IPO, it's a liquidity event for the insiders. And yet so many people familiar with these products, familiar with these companies, buy into it, and they're getting crushed because it came out at stupid valuations. Doesn't mean the market's bad. Doesn't mean it's slowing. If you like a Snickers bar, you're not going to pay $25 for it. Maybe I'll pay $1.50, $2, $3 if I'm really hungry and I have no other place to eat. But these valuations are insane. That's the investment bank approach. They make lots of fees. They want to inflate those valuations. This market's a lot different. So for me, overall, the market, not surprised with this amazing move in Bitcoin we've seen. Bears are going to say, hey, we're still off a ton from its high of 19,000. And bulls are going to say it's roaring back from breaking 3,000. Now it's closing in on 9,000 and it's going to 1 million. Look, Bitcoin's not going to 1 million, guys. It's not going to 1 million. But I can tell you something. It's for real. It's here. And it's not going away anytime soon. So start educating yourself on this market. And you could do so at our site for free or just by doing simple Google searches. And make sure you're finding the right people, the right sites to listen to. It's very important because there is a lot of garbage out there. But this is definitely for real. And again, it's not going away anytime soon. I can debate this topic with my guest, who is never at a loss for words. I love him because he always speaks his mind. This guest, his name is Marin Katusa, who's the founder and CEO of Katusa Research. So he's been financing, investing in mining companies for nearly 2 decades. He's also giving you some pretty amazing ideas on the podcast over the years in a market that's been terrible. Everyone was a winner, but he did have lots of winners that he did give you. So now he's going to talk about cryptos. Marin's going to discuss the current state of the gold market. Is there any value in junior miners right now? And if so, how should you be investing in them, since buying these names on the open market may not be the best way? Finally, Marin has strong opinions on the uranium industry. If you're bullish, you definitely want to listen to this because opinions get really heated on Twitter and all over the place when it comes to uranium. So it's going to be a really cool segment. Definitely want to listen to. And later on in my educational segment, I'm going to break down the current state of the markets. Getting lots of questions, people worried. I'm going to tell you why we could see further downside over the next few months. I've been bullish for a long time. A few periods where I said, hey guys, got to be cautious. This is different. Doing a lot of work on the macro side. You're going to see why it may be a good idea to protect some of those profits you made over the past years. The market's roaring higher because there's a lot of risk right now. A lot of risk. And I don't think it's factored into the market at these prices. It's a really great educational segment coming up, a different tone. Definitely want to listen to that. But first, let's bring in longtime guest, a resource expert, Marin Katusa. Marin Katusa, thanks so much for coming back on the podcast.
Oh, it's a pleasure, buddy.
So I want to start by addressing the gold market, right? I just had an opening saying, man, mining is such a tough industry. I have so many friends in it. It's been so difficult we're going on over 7 years now. And going over the macro, we'll get to several points here. It's going to be a very interesting, great conversation. I want to start out with your thoughts on Bitcoin because we hear it all the time. And when I hear from people who are diehards in gold, they're like, there's no comparison. Gold's totally different from Bitcoin. But do you think, even for a speculator type of view, even for a currency, when people buy gold as an alternative currency, do you think money is coming out of gold stocks and going into Bitcoin? Is that, again, that's speculative money, but is that crazy to say? Because some people are so far over to the left and some people are so far over to the right. But I truly believe there is money coming out of the market that may be flowing to Bitcoin.
I think for over 2 years, I've said it's been a competitor, definitely, that 10 years ago it wasn't. What percentage is, we really don't know, but with the younger generation, I would say the under 45s, it definitely is. Secondly, where I think it is a huge competitor is go take 20 ounces of gold across the border and see what happens. I get there's the face value and what it really is versus the actual complexity of taking gold across the border, which 25 years ago wasn't an issue. Whereas the ability to move crypto and convert it, this still isn't as easy as it will be, say, in 5 or 10 years, but it is easier than taking a pocket full of gold across the border through security. So it definitely is. More so, the cannabis market has been the biggest competitor to the resource sector because it's all based off of speculation, and the liquidity tells you that that's what's going on. Look at the financings for the cannabis sector, the blockchain. You look at Canada's largest exchange is called Einstein. They got 178,000 registered users, and they've been up for less than 2 years. I can assure you that no brokerage account has had that type of growth in the resource sector. So that kind of answers your question.
Now let's get into a couple other topics here because first of all, let's get into like the mergers, right? We see mergers of a lot of the major companies, and we talked about this briefly. I think last time I had you on a few months ago. I wonder if there was an update that you can give us because from what I see is these junior miners, a lot of these guys, and they're the young generation, right, 45 and under. They start these projects. They have no intention on developing them where they're going to become producers, right? 10, 12, 15 years, however long it takes. But now with the majors, it seems like, they're like, why, instead of buying these projects, which we're going to have to develop, put money into, why don't we just buy Gold Corp, which is $50 and now it's, $11, $10, for Newmont or Barrick. And you're seeing these mergers. And then they're saying, well, we're going to divest some of our non-core assets. Is this a bad sign for junior miners? I mean, is this creating another risk that was not really anticipated maybe a little as a year ago?
Well, Frank, we've talked about it over a year ago, and on your podcast, I've mentioned how it's all about supply and demand. And the reality is a lot of these majors are looking for what's called tier one assets, north of 5 million ounces, north of 500,000 ounces of annual production in a politically safe jurisdiction. So there's tier two, and most of the tier three assets are being dumped into the market. But I also, over a year and a half ago, I wrote about the Commonwealth takeover, how the Australians are being valued at a much better NAV basis than the North Americans. So they're going to come and buy out the North American listed gold companies. And we've seen that, Atlantic was on our list that it would be taken out. It just happened by an Australian company, which is interesting because just under 5 years ago, the opposite was true. I remember when I wrote up what Newmarket was doing, they bought out an Australian producing asset, which was Fosterville. That was a company owned by Crocodile Gold, and Newmarket was bought out by Kirkland Lake, and that stock went from $1.50 to $50. So we've seen the market shift from the North Americans had a premium to the Aussies, and in the last 2 years, it's shifted now that the Aussies are having a premium to the North Americans. So we're seeing a lot of that transition where it's the Aussies coming and buying out the Canadian companies. And the reason I call it the Commonwealth takeover is because they were all part of the Commonwealth with the UK. But the fundamental reason is the Australians basically across the board value their ounces in the ground at $1,000 an ounce, where the North American guys are around $1,250 per ounce when they do their NAV valuation. So they've had a bit more disciplined approach, and the market's rewarding them for that. And it's going to continue.
Now, for someone who's been in this market, I want to say for close to 2 decades, if not longer. I'm not too sure exactly the time frame, but you financed hundreds of companies and been in this industry. This is your life. How would you describe it to someone who's been dabbling in this industry for the last 5 years in terms of market conditions? Because how much has changed? Because I'm a big believer you have to change with the times, the strategies, and it's been such a horrible market. One, how does this market compare to anything else you've seen over your career? And two, how are you finding ways to invest and make money in it?
So the biggest question that a lot of the people in the resource sector haven't been asking, which I've been publishing on for well over a year, is how are you going to pay this debt? So after the global financial crisis of 2008, early 2009, cheap money wasn't just for the financial sector or the housing sector. It was also made available to the mining sector. And it was done at a time when prices were high, the commodity price were high. So it was a cheap way for these CFOs to fund their growth strategy. Rather than diluting equity, they did a lot of debt. So this debt wall now is starting to roll over, meaning you have to pay the debt. That's the problem with debt. Eventually you have to pay it. And remember, debt is first secured. It goes ahead of the shareholders. So across the board, I wrote in a whole analysis on this. Across the board, you're seeing anywhere between 35 to 65% increases in the cost of capital and debt. So you really have to emphasize the financial viability of the projects you're involved in or looking at. So this is a sector that, geologists and speculators come in, but more than ever now, you really have to understand financial analysis and truly understand the balance sheet more so than ever before, because margins are getting tight. I haven't changed my tune. I think in near term, the U.S. dollar is going to stay strong. Commodity prices are going to be under pressure. So what I've been doing myself, and as you said, I'm probably one of the largest financiers in the sector. We're announcing what I'm calling, it's kind of a Warren Buffett inspired strategy where we're doing very large convertible debentures, which means I get paid while I wait to speculate. But we convert, you have the right to convert into shares. And the way I've structured it is with units, so you get a share and a full 5-year warrant if the share price takes off. So I capture all of the upside, but I want to get paid while I wait. So rather than taking, second position in equity, I want to be first position, and that's what you get with a debenture. Interestingly enough, you can list these debentures so they trade like a stock. So, Rick Rule calls this thing called a Katusa warrant, which you list the full 5-year warrant. Now we're doing Katusa debentures, where you list a warrant, a debenture, and with that you get a full 5-year warrant after you convert. So it's a sound strategy. I get paid while I wait, double-digit interest rates in cash flowing solid businesses, because that's the new normal.
So, man, that's a great deal for investors, right? That makes a lot of sense, but it doesn't really make sense for the actual companies, right? I mean, they rather just, issue 1-year warrants, right? Okay.
Well, I'll explain why it does, because the way I do it, I don't take any fees from the company. These bankers come around and they pitch the company. They're going to take them to London and New York and Boston, and they're going to do this whole financing tour, and these management get all excited. They jump in business class and they're paying crazy costs. And on top of that, the banker takes 8% cash and 8% in broker fees. So when it sounds like it's 16%, but it's not. When you look at the broker fees, it works out to be about 12 or 13% cost of capital to get that. So out of the gates, an investor puts $1 million in. Well, only 888,000 gets to the bottom line because the bankers take their cut. So I go to these companies and say, I'll tell you what, You've given yourself a 5-year option because that's what the exchange allows. And I respect that. I get it. You have to incentivize your guys. It's competition, peer pressure, blah, blah, blah. But you know what? For me and all the Katusa subscribers, I want to be on the same playing field with management, or I'm not going to give you my money. So after building this reputation for 10 years in the sector, I've survived because I've dictated these terms. And rather than taking the fees and paying the banker, me and my subscribers get aligned with the management. And by the way, management have to be a major investor in the same terms. So everybody benefits. So the dilution that would go to the bankers, we don't need that, and give it to the shareholders. And it's a net positive for the company, because if they think it's so cheap, well, then they should do it themselves also. And on top of that, you're not taking that massive dilution today by doing this debenture that you would otherwise with a bank. And on top of with the banks, they go to 3 or 4 funds that just want to blow this out and put pressure on. So the game has really changed in the sector right now, and I think it's the best time to be positioning yourself for the upside, but you have to have a 2 to 3 year time frame, because I still think the next 6 months will be pretty tough. But Frank, when you and I went to Northern Dynasty, it was a tough time, and I was able to get that full 5-year warrant. You don't want to be investing in something when everyone's excited about it. You understand the value of the company. You do your homework. You understand the financial analysis. And I'm talking about no risk. This isn't exploration risk. I'm not taking any exploration risk right now. I want cash flowing, de-risked, built assets that are already built, permitted, all that stuff. And that's where we are in this market. I'm buying dollars for nickels. That's what I'm doing.
So are you seeing a lot of companies do this with you? I know you're structuring a couple of deals. Is this becoming more common, or is this, a lot of companies are just pushing back a little bit?
I've got, we have a spreadsheet of, hundreds of companies that want us to give them money. The problem is there's very few companies that I want to give money to. So we're announcing one this week for all the subscribers that I'm backstopping 10 million of it myself. And I look at this and say, once I find the company and the terms work, my subscribers get in at the same price at the same time. And the last time we did it, we're up over 50% already in a pretty crappy market, right? So, and that's where we're up right now. And, guys like Ross Beatty and Doug Casey, they all come in with me on these because they know it's structured well. That's the key to all these things. And, the only negative for the retail crowd is you do have to be accredited to do this. And to be accredited, you just tick a box in the financing and say, yes, I'm worth this much. And, that's what you do to prove you're accredited. And for the retail guys that aren't accredited, remember, when I started, I was not accredited. You work your way up, and it goes off of your balance sheet and your portfolio. And there's always a way to do it if you're patient. You look at some of these incredible values that we're seeing in the market on de-risked assets. You don't need to take any risk today. The market is cheap. Be a value investor and be patient. The market is coming to you.
Now, that's a different tone, to be honest with you, over the past at least year or 2 years, where you've been bearish on this industry, but now, you seem more optimistic when you're looking at a 24-month time frame.
Correct, because so many fund managers have blown up, and there's just so little money available that now I'm getting these terms that, Frank, are like, for example, this one that I'm publishing on later this week. Bloomberg, when you list debentures, they have a function that you can value, and it's what 90% of all the fund managers in the industry use, right? We have a Bloomberg terminal. You type it in, you look at your vol, what it's trading at, the share price, and then what should the debenture, when you list it, what should it be trading at? Because we've structured it such in a way with the full 5-year warrant, we had to go to the programmers at Bloomberg and walk them through, because they've never seen this before. That tells me that we're doing something right, because the terms and the odds are so much in our favor. When there's no one else competing with us for the capital, you get to dictate the terms. Now, Frank, 6-7 years ago, I wasn't doing many financings because I had to compete with all of this fund money who thought, this is a near-term blip. All those guys have been washed out. The commodity market is washed up hundreds and hundreds of billions of dollars. So this is our advantage of being here, And it will change eventually once I see competition and guys willing to do, say, a half warrant. Well, then I step back. And remember, the fundamental rule is if management issue themselves a 5-year option, why the hell am I going to take a half warrant at 2 years? And my favorite line is, management try to negotiate with me, and it's kind of a thing. They want to be big and tough in my boardroom, say, well, we're not going to accept that. And I said, no problem. Then there's no money. Like, get out of here. And then the irony is they try to, weasel out of that, and then say, okay, what about a 3-year warrant? I said, okay, I'll tell you what. You change your options to 3 years, and I'll do the 3-year warrant. You should see how fast I get my 5-year warrant.
Explain how, because when we were on a bus tour, we went to your copper project, right, which is really cool.
Yeah.
We had a lot of big names on that bus. I want to say more than 30 people, maybe 40 people. And I remember you saying, hey, guys, financing is open for me, 5-year warrants, and everybody kind of laughed at you. Talk about to maybe average investors out there. I mean, 5-year warrants, you never really heard of them for a long time. And now they're more common because of the market. But how common was that pretty much before 2013?
Oh, very, 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 very rare. You had to go down the food chain and accept a lot of a risk. And it was more early stage projects. And it was funny. Like you were on that trip, and remember we had that microphone, and I made everyone jump up in front with me, and they had to pitch to everyone else. And the wild thing was here we are, we're going up to this copper mine, and there's about 45 guys. What did we calculate? Something like $12 billion of net worth was on that bus. And and I put up my hand. I asked, put up your hand if you've ever been to an operating mine. And what was it, like 6 guys out of 45? And I was like,
that was crazy.
Crap.
Yeah.
These are some of the biggest names in our industry, and I was blown away. So few guys have actually gone the distance to build these mines. So many guys, like you mentioned, were, get to the point of selling your project to someone bigger who will build it. And that's where I took the conservative thing. And everyone, like you said, laughed at me and said, aha, the Katusa warrant, sure, whatever, buddy. Well, guess what? Now it's like a mandatory with producing companies. You know what you're also seeing now, Frank? A unit financing where the investor can get a piece of the royalty. This is a game changer, what we're working on here. And this is going to be a big competitor to the royalty companies because so many retail guys have said, well, I'll just invest in a royalty company because they get royalties and it's a de-risked asset. That's fantastic. But what if you now can get a share, a warrant, and a slice of the royalty? That's where we are in this market. It's not going to last long, but you have these windows of opportunity. I remember the exchange couldn't understand why, the HDI guys were giving a full warrant on, the world's largest undeveloped gold copper project. It was $25 a share 5 years earlier, and we did it at 45 cents a unit with a full 5-year warrant that listed. And within a year, that warrant was trading at $4. Do you know why, Frank? Because me and you and David Lowell were the only guys willing to jump on a plane and go there, and I backstopped 40 million of it. That's why we got those terms, because no one else was willing to do it. And at the end of the day, these companies need capital, right? And it's just a supply-demand issue. So if you're there, maybe it's luck that, we position ourselves to have cash in a bad market, whatever. It is what it is. This is where we are. And these are the terms I want. And that's what we're getting. And what I was made fun of by the industry 5 years ago, demanding these 5-year warrants, is now kind of common nomenclature. So everyone's kind of accepted that's the new normal.
Yeah, it's amazing because what you're saying here too, we can go back to, when you have really depressed times, right? Marin, look what Buffett, the deal he had during the credit crisis with Goldman. I mean, you're looking at getting $5 billion worth of perpetual preferred shares, right? Which get paid before the common shareholders in case of bankruptcy. But then he was also able to get warrants, which was like 43 million. And I think he put $5 billion in, made 3 point whatever billion a few years later. It was almost like a no risk deal to him at the time.
Correct.
But you only get those deals when things are depressed, right?
Correct. And that's where I'm at right now. It's about limiting my downside. And if the upside churns out, then I really capture as much as I can on the upside. But I'm going to get paid while I wait for that upside with interest in debentures. It's just a really smart way of playing this game.
Okay, now let's move from gold to uranium, right? And this is a sector that you have a lot of bulls on. There's a lot of emotions on Twitter. I want to keep this as cordial as possible because There's a lot of bulls out there. I have money invested in uranium. I believe you have money invested in uranium, but you have a different opinion out there because there is people who are super bullish on this market and just all in. And when you have different opinions on anything, especially if it's Tesla, whatever you see, the Twitter, the trolls, and everybody go crazy. But I want you to talk about the uranium market because you do have a different opinion than a lot of people out there in this market as well, and you've had that opinion for I think a couple of years now. What's your thoughts on uranium? Do you think this is a good sector to invest in?
Okay. So you're going to hit a nerve in the troll factory here like never before. It's funny. The uranium market, I think they're using one-dimensional analysis here. So many of these guys keep talking about, what it should be. And the irony is everything they're saying is correct, except one thing that they're missing here. And I'll give you some, just for the viewers that don't know my background in uranium. Frank, literally, I am one of the largest investors in the uranium market and have been for years, but I look at it a very different way. I remember writing articles in 2013 about underfeeding. I was the first guy to really crack the whole thesis of how the Russians are going to flood the market with their underfeeding. And I remember at the BMO conference, which is kind of it's the institutional world, who's who, and the big company guys meet with the management. And I was in a room with the producer of the president of the world's largest publicly traded company at the time, and I said, hey, Tim, I think your underfeeding numbers are wrong. Your whole team and the whole industry thinks it's going to be 5 million. I think it's going to be 15 to 20. And he laughed at me in front of the whole market. He goes, Marin, you're a smart guy, but you and your love for Russia. And I kind of sat there and I went, this isn't about love for Russia. I'm Canadian. We're neutral. It's whatever. I treat everyone with respect. The irony was the Russians came out with over 25 million in underfeeding. Okay. And what I was trying to explain at the time was the currency advantage that the Russians and the Kazakhs have. And I actually think, and I talked about this in 2015 when I was asked to give the keynote at the World Nuclear Fuels Market. That's kind of the who's who of the utility buyers versus the producers. And I said, look, guys, you really need to get your stuff sorted because if I was the Kazakhs, I would flood this stuff. And I don't think the Western world truly understands how big these resources are on the Kazakh side and the permitting advantage that they have. Secondly, I talked about the currency advantage that they had. And you look at how the whether it's the ruble or the tenge with the Kazakh currency, they're still as profitable as they were when uranium was 40 because of the currency advantage. They've been depreciated more. Thirdly, you look at, okay, I was kind of surprised when if you pull up Kazatomprom went public, and they're listed now in the London, a percentage of the companies listed on the London Exchange, and you go and look at their PowerPoint, you flip through to one of the slides, and they use something that I wrote, and they credited it to me. Now, they didn't ask me for that, but they did do that. Cool, whatever. That's kind of a tip to the hat of who they think are the top names in the industry. There's 3 large firms that are well followed, and I'm the only one that was not paid for by the uranium or nuclear industry. UXC, their clients are the uranium industry, and the Tetra Tech is also their clients are. Mine are not. Mine are my subscribers. So I was the only independent guy that they used in that report. Here it is fundamentally what I think, Frank. If you're the Kazakhs, and let's play game theory here, okay? Now we're going to get into some deep stuff. What does Cameco have? They've got some incredible assets. They've defeated the CRA hassle, which was a headache for them. They were right. They did that. The management, Tim and Kitzel and their crew did a fantastic job. And then they have some ownership in Kazakhstan on their production, Inkai and all that. So what if the Kazakh strategy is to actually bleed out their number 2 competitor? It's actually what Rockefeller did with Standard Oil. And the difference is you're backed by the state rather than being an independent company. So what I think, I do believe that happening. This is my unique perspective, and I think Cameco is fighting a battle with someone that they can't beat. Number two, I believe the result of the Section 232 will come out in what I've called a quota system, where it'll be a gradual buildup. I've talked about this for over a year. And it was funny, you were at the conference, my partnership with Jay at Cambridge House, where I had the guy who created the Section 232 openly said, Marin, I got the idea from your book and the chapter on uranium. And these are my friends. Jeff Clendo's a good guy. And I talked to him about it, and I said, I just don't see them going to 100%. You just don't have the infrastructure. And he said, yeah, I think you're right, but, maybe your quota strategy will get to there. And I do see that. And years ago, I wrote about how we have in the oil markets, you get it, there's a Canadian pricing, Western Sedimentary price, you got your WTI price, you got your Brent price for the Europeans. There's different pricing for oil. I've always suggested that there will be a different pricing for uranium. And I do believe that the result for the Section 232 will come that it will benefit permitted, built, and the key is unhedged. That's where you want your maximum size. So now if you've got some deposit in Africa and an AK-47 nation, I'm going to get the trolls going now because they hate when I talk about AK-47. I'll tell you what, guys. After you visit over 100 countries and put body armor on and visited these places, then come and talk to me about trying to rip into what I call AK-47 nations. The point is, Frank, if you're not willing to take your family there, don't put your portfolio there either. Okay, I've learned the hard way, been there and done that. And so many of these areas don't have the infrastructure in place that even if uranium got to $100, guess what? It still wouldn't be economic. Because guess what? We've seen two massive cycles in uranium in the last 25 years, and those same projects have been floating around. So if they couldn't do it at $135 uranium, even with the improved technologies and all the great stuff that these industries doing, it ain't going to fly. So keep it simple. Stick to built, permitted, and unhedged. That's where I'm putting some big money. I think that's going to be the clear winner, and I want just U.S. production. If I can just quickly drive down and see the assets, I'm not going to go to places where I need to put body armor on. And you know what, guys? When I was 23, 24, 25 years old, I thought it was really cool going to somewhere, discover something cool like in the movies. That's not how the real world works. You're going to get caught up in changing political regimes, security issues. The world's changing, and more importantly, the Russians and the Chinese have an advantage over you as a Westerner going to those jurisdictions because they've got the government behind them. You don't as a Western investor. So put the odds in your favor and keep it simple. That's it, Frank. And I'm still bullish on the sector, but I'm just telling everybody I don't need to take the risks. It's so cheap. I'm getting built out, permitted assets for a fraction of what it would cost to build today, never mind the permitting delays. Keep it simple.
So you brought up an interesting point where, Kazakhstan is bleeding, whether it's Cameco or whatever. And I was just thinking it could be similar to OPEC where they try to bleed the shale producers, right? So they'd flood the market with oil, so prices below, say
Good
below
analogy.
$45 a barrel, right? And then most can't produce at those levels. But after a while, and this has happened with MacArthur coming off and everybody cutting supply, the fundamentals begin to change where no shale producers are producing anymore. So a ton of supply comes off the market. And even if demand stays the same or happens to go higher, now the fundamentals go in your favor, which is the argument I'm hearing for uranium, where they're looking for price discovery. There's huge demand. A lot of supply has come off the market, and there's a lot of contracts from the biggest electricity producers that are going to have to get renewed. So, is that a catalyst that you see, or is that something that you think is overrated, or is that something that you do see because you actually said, I am bullish here, I just don't want to take on the risks, and you think prices are going higher?
There's no shortage of uranium. And that's something that in their analysis, a lot of the ultra bulls fail to, when you just go through some of these companies, and I know the management team, and they keep pitching it, and one thing I want all your viewers to truly understand, go through the MD&A and see some of these, talking heads or these gurus or wannabe gurus, they're getting paid by these shitty companies to talk about these things. That's the biggest piece of shit around, right? So you look at it and go, okay, you don't really have a deposit that's anywhere near being built or permitted or, and they're giving me all these 10 pages on the uranium sector fundamentals. that's one of my biggest pet peeves in the sector is when you see these companies with no gold and they're talking about the gold sector. So that's a side rant in itself. Secondly, what they don't tell you is there's no shortage of uranium. For the U.S., okay, it's going to come down. What the fundamental rule of Section 232 is, they're trying to even the playing field and security. What they've done on the U.S. on the oil side has been great for the country, and people forget that just 35 years ago, America was the world's largest producer of uranium. It's American technology that took Kazakhstan from 0 pounds produced in the late 90s. I remember when I first visited, I think it was in 03 or 04, they had 800,000 pounds of production. And then last year, so you're talking about in 16 years, they went from just under 1 million pounds, Frank, to over 60 million pounds. Talk about the growth there. There's no other commodity or any other country that has seen that explosion in less than 20 years. That is game changing, right? Secondly, if you're in America, I don't want some foreign company coming in, not producing in America, but then buying it from the Kazakhs and then relabeling it and then dumping it in the U.S. That's an obvious thing that I think has been happening in the sector. So why should some foreign company, non-U.S., and then the sector in the U.S. be vulnerable to that, right? So I do see the advantage for the American sector is U.S. grown, this made in the USA, and I think it's going to be a gradual buildup. I don't know. I throw out numbers because really I'm guessing, Frank. I don't know. I look at how much is built, and I'm one of the few guys that have been to every single producing mine, and I see what they could do. And I go, it'll probably start at 2.5, 3 to 5 million pounds, then gradually build up. But the Americans consume a little over 50 a year. So can they get to 50 in 5 years? Hell no. There's no chance in hell they'll ever get that much built and that fast because of the permitting delays. This is not Kazakhstan where the president says and it follows. It's just it ain't going to happen that way. So I think it's going to be a quota system. And it's going to be, best case scenario, 15 to 20 million pounds over 10 years or something like that. I don't know what the numbers will be, but it's just kind of like common sense and game theory and see where we're at with it.
Now, last question here on uranium is, Section 232. For me, it seems like it's been a drag, right? So if people don't know what 232 is, it's, a mandate that's on the president's desk now as of April, where they want to produce more uranium. I don't know if it's 25% of the uranium.
Well, the last time I saw a picture of Trump, there's nothing on his desk. So what I'm trying to say by that joke is, okay, Frank, you've been in this game long enough to know, name me one company that had a catalyst. We're going to get a permit the end of Q2, and they actually did it, or they got their mine in production on time, or they closed their financing. Frank, the whole point is everything takes longer. We're talking about politics. Who says it can't be delayed a little bit? And what is the uranium sector, which is like a zit on the ass of the American economy, going to do if Trump says, I need more time? They're going to say, okay. I get that they say that it has to be done because that's the thing, but so many guys are expecting overnight that the uranium market's going to pop. I think that's the wrong bet here. I think there's been so much of that expectation priced into so many crappy deposits that I know that are being promoted and are being paid to not just promote, but pay to troll the side of what I'm trying to say is hey guys, you don't really need to take the risk of this and just stick to the common sense plays. They hate that strategy because the junior sector is so used to positive promotion from the talking by the industry leaders. And I'm saying, yeah, well, I don't really want to go to that part of the world to develop your shitty asset because the world doesn't really need that mine in production. And it's not going to be economic to begin with, even if we tripled the price of uranium today. So I don't need to go there right now. Now, that doesn't mean some of the stuff that, some of my colleagues are financing that need $90 or $100 uranium won't work in 5 years or 10 years. but that company is going to dilute itself to hell. And that's not where I'm at right now.
That makes sense. All right, so let's finish with this because we've really covered in depth and great stuff, Marin. I mean, in both subjects. Again, guys, you hear different opinions about everything, but for me, and I know you feel this way too, Marin, when I'm really bullish on something or bearish, I always want to hear the opposite opinion. It just makes me research even harder, makes me ask questions. And in today's environment, especially with our politics here with Democrats and Republicans, you have to hate each other. You can never come together and disagree and say, okay, why do you disagree? Okay, here's what I see, and then work out something, a solution or whatever. It's I hate you too, and then nothing ever gets resolved. So yeah, difference of opinions is always great. And I guess we'll finish with this since we covered gold in so much depth and uranium. You always giving ideas. I know you said earlier, even with gold, that you've been more conservative, convertible debentures. What are some of the names out there? Because I see a name like Orin Resources as it just seems to me it's a really good position. They got a great management team. You introduced me to the management team probably about 5-6 years ago. They're doing all the right things. Their stock has gotten hit, but it's actually been performing pretty good lately. But there are certain companies out there that are doing it right, and it's just their stock has gotten hit pretty hard just because of the market conditions. Is there anything out there that you're kind of like looking at saying, okay, this is something I want to invest in, or maybe I'll invest in, if I see it come down a little bit more?
Look, you talk about Oren. Ivan's a good friend of mine. I've known him for, over 12, 13 years. He's a hustler, and most importantly, he's a survivor that's backstopping his own deals. I've seen him put his whole net worth to backstop the deals. So he's a good guy. I think you have to start with the people. I put a hell of a lot of money into Uranium Royalty Corp because I believe they're going to take advantage of the near-term disappointment in the uranium market. And that's I'm playing the long game, Frank. I don't need, everyone expects this to pop in the next 4 or 5 months. Look, that's what you really think. You need to rethink your whole strategy. This is a long game, and it's a very political one, the uranium sector. So that's one that I think you really need to watch. I think that's going to be a big winner. And then start with the people in the sector. You talk about gold. I'm very close with a guy named Ross Beatty. He's put over $100 million of his own money into a company called Equinox. Now, open disclosure, I'm one of the largest shareholders of the company myself. And you could today buy stock at a price lower than the average price that Ross and I bought the stock at. But that doesn't mean it's a bad investment. It just means that's the sign of the times, and we keep buying it. But that's what you want to do. And he's put they have 2 operating mines today, and they're trading at a little bit above 0.4 NAV. You don't see that in a normal market. And he's going to continue to grow the company. And when Ross says he's going to get to 1 million ounces of gold, he's going to do it. We had a massive win with Altera. Same thing. Ross was the largest shareholder. I think I was maybe second or third largest shareholder. You go in with these stories and you move forward. Remember when I took you up on a helicopter with Ross? Mm-hmm. You saw the intensity and just the way he thinks. You're like, there's a reason that guy's a billionaire, right? He avoids the noise and he just does it. You look at what Lucas Lundin has, another guy you want to follow in the industry that I have a huge amount of respect for. Some of his companies are trading at a big discount. Recently you look at what's happened with Pan American. That is something that you might want to start looking at building a position in. So, and these are all producing, built, de-risked, and it's cheaper than when they were getting to where they are today. That kind of confirms my whole thesis here of why do I want to take any exploration risk in this game? I'm super light exploration. The geologists have been a catastrophe in this industry. It's funny. A lot of the geos don't like my style, but really, they've been awful. Just really horrible use of capital. The management teams of these exploration companies, their lifestyles, the costs, the G&A, it's just been awful. Secondly, why do I need to take risk when something built and producing is cheaper than I could build it for? So why go through that whole cycle when I can just do it now, advanced, and with the best names in the industry? And Frank, you got to look in the mirror and really ask yourself, are you better at picking a stock than someone like Ross Beatty, who has a whole team of analysis? They've had access to the site visit, drill core, data room, and they have the ability to backstop this thing to the conclusion, then, when you and I jump in on a site visit and spend 3 days there, so if you find the best guys in the business and they have the best team around them, you become a partner with them and work with them and backstop their financing. And hopefully you can get a warrant out of them. And, you kind of try to do the Katusa negotiation with them. With someone like Ross, hey, we do have a full 5-year listed tradable warrant on Equinox. Like, that is a phenomenal valued asset. And he just says, it's a sign of the time. But he himself has put over $100 million into the deal. That's how you're going to survive this bear market.
And last thing here, when is the next invitation to drink wine at your house? I think that costs you a lot of money, buddy.
I don't know if you want to explain what happened there, but my God, was I hurting the next day.
Yeah, so I went up to Vancouver, and Marin invited me to his house, and and we had he's got how many bottles of wine in your wine cellar?
A lot.
And I definitely owe you on that one. But yeah, we just popped a couple, and we kept going and going and going. It was really cool. So we had a good time that night. But I'll make that up to you. I'll make that up to you, I promise. So because we drank a lot of wine, and I wasn't feeling so good the next day either. So I really appreciate that day. That was a lot of fun, buddy.
Luckily, I've got a very understanding wife.
No, I hear you. So, all right, man, listen, we covered a lot, man. I appreciate it, man. We really, you went in detail a lot with, again, with the gold sector, the macro point. I think from an individual investor standpoint, I thought this was fantastic where, hey, listen, you could make a lot of money in this market because it's so depressed, but you want to take on as little risk as possible, and you provided ways to do that. So I know they really appreciate it. And like always, you always share your ideas. So thanks so much for coming on, man. I really appreciate it.
You bet, buddy. And I guess I'll see you in July next.
Yeah, absolutely. In July. Yeah, absolutely. So a lot of conferences coming up, and I'll probably be there. Actually, June. Aren't we going to the other event in Vegas?
Oh yeah, that's right. I will see you in June. I forgot about that.
Yeah. So what conference is that again? That's the Libertarian Conference, something, right?
Yeah, that'd be kind of interesting to see.
That's gonna be a lot of fun. Yeah. So I'll definitely see you in a couple weeks, man. And thanks so much for coming on.
Take care, buddy.
All right, guys. Great stuff from Marin. And look, he provided ways he's positioning himself in a depressed market, trying to take as little risk as possible, yet you could enjoy that huge upside if the cycle turns. Because we all know you make the biggest gains, right? You make huge gains when investing when times are terrible. Usually stocks are cheap, they're out of favor, they trade at ridiculous valuations, which we're seeing a lot out there. I mean, I thought there were ridiculous valuations over a year ago. But bear markets and even bull markets tend to last longer than everyone expects. I love his comments. I love it providing ways saying, hey, also he's bullish on uranium over the long term. I think he shares the same opinion as most people out there. But just saying, hey, be careful in the short term, and he's not going to junior, which is, a little different from other people out there. Alkin is big uranium, and these guys, again, when they get on Twitter, sometimes it gets a little heated and stuff like that. For me, it never makes sense to just, be pissed off at someone because they have a different opinion than you. For me, I want to learn. I want to talk to them. I want to ask them why. And if they don't know the numbers or things aren't working, I'm going to share my numbers with them. But that's what makes you a better investor. I mean, it's even with Democrats and Republicans these days, right? I mentioned that before with at the end of the interview, Marin. But man, these guys like hate each other. Let's just come together. It's okay to have a difference of opinion. I mean, that's what capitalism is about. Markets are about. That's what we're founded on. This country was founded on, right? And democracy. But you have to be able to talk to each other where it just can't be, hey, the Republicans have a good idea. Forget it. No, we don't like it. Democrats have a good idea, and we're Republicans. No, we don't like it because it came from you, especially heading to election year, because it's pretty crazy. But I love his comments on this sector. Let me know what you thought. Again, it's podcast about you, not about me. Let me know what you thought about that interview. Frank at CurzioResearch.com. That's Frank at CurzioResearch.com. Now let's get to the educational segment. Run a little long, but hey, this podcast is filled with a lot of great information. This is going to be even better here, guys. Pay attention, please. Because people ask me, Frank, is it time to be worried? You're nervous with the markets. And I had a whole rant on how this trade thing is all BS and it's going to disappear. I truly believe it will. But right now, hey, You're hearing strong statements from both sides, trying to save face, which is fine. Depending on what time of day Trump tweets, things are good with China, things are not good with China, going back and forth. But if we do have a trade war, listen, it's going to really crush both economies. I mean, China much more, which we know, we've seen by the numbers. I mean, you're cutting off, the person you sell the most goods to. I mean, it's common sense. I mean, and not only common sense, I broke down the numbers, past podcasts, showing you how it's a disaster for China. It's a disaster if they don't get this deal done. But now it's going to be a disaster for us as well. We didn't feel it last year. Our markets didn't go down at all last year. They went down from September through December, mostly on Fed concerns. They were more hawkish, looking to raise rates. And then, they changed their tone like in December. And then the markets went up a lot this year to start the year. It's up about 10% still. But now, this year, I mean, we had tax reforms last year. It's a big difference. Now those are factored in. So it's going to hurt us as well. But it's in the best interest of Trump and China to do a deal. It just is. There's an ongoing risk. And more important, it creates uncertainty. You guys know how I feel about uncertainty. I've told you it's the death of stocks. It's death of markets. People hate uncertainty. There's a reason why when you see a company getting sued and then they're getting sued over a long period of time, you'll see the stock weak. It really doesn't get momentum. And then once they settle, even if it's for a good amount, as long as it's not going to bankrupt them, and usually these settlements can be paid over 10, 20 years. But once they announce that settlement, that risk, that hurdle is removed, you'll see that stock, even though they have to pay, you'll see that stock roar higher because you took that uncertainty out of it. So we hate uncertainty, and we have a lot because of trade right now. I mean, there's so much uncertainty. You see stupid stories like China's going to sell treasuries. By the way, that the Treasury Department sold $40 billion of 2-year government notes last week to the strongest demand it's seen in, I believe it was 9 months, at a yield of 2.125%. By the way, that's the lowest yield at an auction for 2-year treasuries since January 2018. Someone tells you treasuries aren't a safe haven. People pour money into it. Believe me, things are fine. China's not going to be sending treasuries anytime soon. But, you just see things like that pop up. And they, there's people that have been saying, China could really destroy the U.S. And, they have to put that money someplace. And it's best to put it here. Every little alternative that they'll just, destroy the entire nation. It could be so dangerous. But again, you're going to see these stories surface. And like I said, if China wants to get serious about a trade war, they would cut the supply of rare earths to the U.S. or raise prices significantly, which, are tariffs on them, which would crush a lot of chip companies, would crush manufacturers of tech devices. Yes, that's Apple. It would hurt our defense companies who use these materials to build weapons. And China controls, 85, 90% of the supply, based, depending on what stat or what firm you want to believe, but it's around 85 to 90% of the supply in rare earths. And we're starting to see stories like this surface, which has led to rare earth prices rising over the past 2 weeks. So you're seeing these, things escalating a little bit. And look, I still think a deal's going to happen. There's too much at stake for both nations when this seems like an easy solution, given that, China and U.S. can help each other in so many ways. So many ways. And China opened up its market so they could accept foreign investment in their state-run companies now, which were monopolies. There's like 12, 13 major ones. I mean, there's just the LNG, how we could supply them with LNG. There's just so many different ways that we could work with them that makes sense, where we'll both continue to be the world's leading economies for decades and even centuries to come. And just considering what has to happen, well, we just want trade to be a little bit more fair and stop stealing intellectual property. Trump heading into election year, guys, and he's pretty crazy to continue to have these fights going on because it is going to hurt the market a lot, which I'll tell you in a minute why it's hurting the market. But that's just one risk. One risk. Again, something I think is definitely going to get resolved, but the longer it goes, the more uncertainty is. But then when we look at store closures, they're out of control right now. It's not just department stores. The CVS, Pier 1, Party City closing lots of stores. It ends up over 7,000 store closings announced this year. It's not even June yet. This compares to about 5,500 store closures announced by this time last year. And when you say the trade war and how is it affecting and is it going to be a solution, I could tell you, you listen to the conference calls on a lot of these retailers. And a lot of them warned that earnings would possibly be lower, and it's not factored into their guidance. Like the trade war, if there's a 25% tariff on Chinese imports, if that becomes a reality, that's not factored in. It's not factored into their guidance. I mean, you look at Macy's. Macy's reported a great quarter. I mean, they blew out the numbers on the earnings, reported great revenue, but they didn't raise their guidance. And on the call, they said, hey, this doesn't include, 25% tariffs on Chinese imports or anything. If that happens, we're going to have to change our supply chain. And that's a lot of retailers, a lot of companies. Probably more than 40, 50% of the company's S&P 500. And if that happens, that creates uncertainty. That's why you've seen very few companies raise their guidance this earnings season, even if they blew out the numbers. And what happened to Macy's? Up 7-8% after they announced their numbers. And then by the end of the day, it fell 1% because people are worried. Again, uncertainty. It's a killer. It's a death of stocks, death of markets. Looking at stocks in general look really ugly. And we're up 10% this year, yes. But remember, we fell 20% from September through December, so we just bounced back a little. But you have more companies trading at 52-week lows and 52-week highs. A lot of names, good names breaking down. And a number of big names down 20% plus over the past 6 weeks. It's pretty insane. I'm not seeing a lot of stocks kill it right now. The ones that did report strong earnings and even raised their guidance last quarter, those companies came down as well. Not seeing a lot of leaders who are just killing it in this market. Manufacturing activity just came out at a 9-year low. Guys, this accounts for one of the biggest components when it comes to employment, especially in sectors like healthcare and business services. It's a 9-year low. Something to worry about. U.S. new home sales fell about the most in 4 months. QGDP, guys, getting cut by everyone out there from well over 2% to a little bit above 1%. That's a big deal for next quarter GDP. It's being cut. We have an inverted yield curve, which I would tell you is bullshit right off the bat because we've seen this news come out how many separate times. It's going to create a recession all the time. But, and by the way, inverted, the 10-year treasury yields fallen below the 3-month treasuries. And when you see that, it's viewed as a recessionary indicator. And again, although it's not accurate, when you throw in all the other risks in the market, now you want to pay attention to something like this. Again, it's not just one data point that works every time. It doesn't. If there was, everybody would use it. But now I'm taking this a little bit more seriously with the rest of the risks. You look at it internationally, you see how much growth has slowed? Eurozone manufacturing contracted last month. German business confidence is at a 4-year low. South Korea exports declined. This is a big indicator for the chip sector. It's telling you demand is slowing. Brexit has not been resolved. How long ago did that happen? Again, something that creates a ton of uncertainty. Washington is worse than ever and probably our biggest risk. I mean, I don't see this changing anytime soon because nothing is expected to get done, probably for a very, very long time. No matter if the Republicans get reelected, Trump gets reelected, or not. I mean, these two sides just hate each other. And we have an infrastructure built on, we have continued investigations on Trump after everything was cleared, regardless of how you feel about this or whatever. But isn't there so much more important things? Yes, people are going to be out there saying, oh, you should impeach him or whatever, whatever. You got extremists. Take out the extremists. And I'm talking to most of the people in the middle and a little bit wider, not all the way on the right, all the way on the left. But we need infrastructure in this country. It's dangerous. Our bridges, our pipes, our waters, our dams. Come on. There's millions of studies out there. It's terrible. I mean, this infrastructure, some of it's over 100 years old. How hard is it to get together on something like that? To really pass a deal. We have the debt ceiling deadline coming at the end of the summer. That's going to be fun. That's going to be a nightmare of how many politicians are going to just, sugarcoat, get as many things as they can to vote to pass. I don't know why they're just going to extend it for years and years. This keeps coming up. And again, it creates uncertainty and other risks to the market. We should have the current administration fully focused on getting a deal done with China, not fighting, continued investigations that were already investigated. At the end of the day, it's all nonsense since we have an election coming. And guys, our politicians, you need to know it now. I mean, the only thing they care about is getting reelected. Believe me, they don't give a crap about you. They don't give a crap about me. All the best interests of the country, they'll lobby on it. They'll say it. These guys are looking to get reelected. These are power people. That's what they care about, power. That's what it's about when you're a politician. You need to be in control. You need to get reelected. If you asked any one of them, if you had the opportunity to do the right thing for this country and not get reelected, or if you had that choice, oh, I'm going to get reelected, or I had the shot to not get reelected, but I'm going to be a huge proponent on a certain topic that makes sense and I want to make the country better, 100 out of 100 times they're going to vote, nope, I have to get reelected. They think they could do more in office. That's what they'll tell you. But it's all about power. And the hate right now, guys, this is the biggest risk, long-term risk to our market, is Washington. And to make matters worse, you have Biden throwing a big fundraiser in New York City, which makes sense. I don't like Biden. And he's the front runner now. And it's being funded by Andrew Cuomo, which makes sense. But it's also being funded by Jim Chanos. Jim Chanos is the biggest short seller in the world, the smartest short seller in the world. I don't know if that's a glaring indicator or not of what he thinks is going to happen if Biden gets elected. I mean, short sellers are now funding political campaigns. I don't know. Is it me? Does that sound crazy? I mean, I guess I do the same thing if I'm a short seller. I want to put money behind the person I believe is going to be the worst and destroy the company. Is that how he feels about Biden? Is that the guy you really want raising money for you? I know he's a billionaire. I know he's rich, but he's a short seller. That's what he does. He doesn't go along anything, and he's pushing for you to get elected. I don't know. That's pretty crazy. And not all is bad, guys. Not all is bad. Inflation is tamed despite milk prices rising like 15%. Gasoline prices rising in the holidays, tuition, food, electricity, education, all these costs rising. These are the costs that us Americans know the most, American households. We pay those. But they focused on a CPI, and it's tame. Unemployment is still very strong. Valuations are not crazy rich. The S&P 500 is trading about 16 times forward earnings. That's in line with the 5-year average. And over the past 10 years, it's like 15.3. So we're not, just to put in perspective, the NASDAQ is trading at 40 times earnings just before the tech bubble bursted, right? So we're not crazy expensive at all. We have Biden in the lead. If he does get elected, it's much better than Bernie Sanders, right? In terms of the market in terms of the markets, because his plan is to take 70% of the income from the super rich and give it to whoever. I just laugh at, I don't care what side of the aisle you're on. How is that a good thing for Americans, capitalism, innovation? I mean, that never worked in the history of any country ever since the world was created. The distribution of wealth. And where do you think those people who are making that income are going to go? They're going to leave this country immediately. You think that's good? You think it's good for innovation? You think it's good for philanthropy? You think it's good for so many different things? And basically giving people who don't have a job money. Right? So you're giving money to these people. It's the easiest way to get votes. Makes sense. And look, hey, if I didn't have a job and had tons of debt from credit cards and student loans, look, I'd be wearing a Bernie Sanders shirt every day. I'd be out there, hey, Bernie, let's go. Fortunately, I work a lot. I work my ass off. I don't think I should be giving a lot of money. And again, I'm not in that class of 70%. But still, I work hard. I sacrifice spending some time with my family to make things work because I know long-term, if things work out, have a good retirement, be able to spend more time with my kids and stuff, but you're going to get penalized for that, for working really harder than everybody else, or you're going to take more money away from us and just distribute it to someone else? I mean, does that create anything, an economic front? Does that create value? So anyway, the fact that Biden is in a lead, I think is, a positive. I also think if you look at the Fed, the Fed is probably going to lower the rates a lot sooner than people believe because we're seeing growth slow tremendously. We'll look at the cuts in GDP from 2 point whatever, 2, 3, 4, 5 to 1%, 1.2% around. The economists really cut GDP. And then if you look internationally, man, the markets are slowing like crazy. There's very little growth out there. So that would be a positive, lower interest rates. As you can see, a lot more negatives than positives, right? It's why I'm lining up on a portfolio of my newsletters. So expect a few sell alerts over the next week or so if you're a subscriber. Again, I could be wrong, and I truly believe there is going to be a solution to this. It's just getting drawn out much longer than I ever anticipated. Doesn't make sense. And in the trade wars, and when it does, that's going to be a positive for the market, remove uncertainty. But still, when you combine everything and you look at everything in a whole, guys, I want to look at the numbers. If the numbers change, you have to be able to change your opinion. And right now, there's just a ton of uncertainty in the market right now. A ton. Again, we may see a quick rebound since the markets are down for like 3 straight weeks, but it's probably going to be short-lived. There's just too much uncertainty out there. Uncertainty with trade, uncertainty with Brexit, uncertainty with Washington. And we've seen economic numbers come down, figures come down, slower growth internationally. And more important, it's hard for companies to invest, let alone investors, when they have no clue what's coming down the pipeline. And those people out there say, well, nobody can predict the future, but you're looking at companies where things are going good. Let's take Macy's as an example. If I turn the corner based on these numbers, if we have trade wars with China and we see these tariffs being raised, you're talking about a company that's going to have to then change their supply chain. And you're looking at hundreds of companies, the S&P 500, are just sitting on their hands going, okay, what do we do? Like, we could forecast growth. You never know what's going to happen in the future. But there is so much uncertainty what's going on with trade in China. And some of these companies have exposure, especially technology companies. I've seen a lot of those companies get nailed one by one. But you have companies that won't raise guidance. They're not going to invest right now because you'd be crazy to invest with this much uncertainty because that's a major change. And would you invest? Think about gold. Would you invest in gold if your project produces at, say, 1,100 and prices are 1,000, let's just say? You'd be like, oh, you know what? Next year, we're going to put some more money into this project. We want to start producing it. Now you throw in China, who says they're going to raise price by 25%. Now that cost goes from 1,000 to 1,250. Are you still going to invest that money in that project? Again, I'm using this as an example. No, you're going to hold up. I want to see what's going on first. And when you have this uncertainty, you're going to see companies continue to be conservative. They're not really going to invest that much. A lot of these companies do great when they invest their money. Their return of capital. Some of these companies are great. Some companies suck at it, but most companies are great, especially in the S&P 500. But they're holding back CapEx. They're holding back investments until there's more certainty. Until there is, lighten up a little bit. You guys should be up. Should be doing good with our portfolios. Should be doing good overall with the markets. Have been up a lot as long as you're not 100% invested in mining and gold and stuff like that, which unfortunately some people are. But lighten up a little bit, about 15%. So if we do come down, you'll be able to buy your favorite names at cheaper prices. And that's what we want to do. Buy low and sell high. So you might see a couple of sell alerts, or you will see a couple of sell alerts in our newsletter over the next week or so. And I think you should lighten up a little bit because there just is too much uncertainty out there in the markets. If you're looking for how do I invest in companies right now, what should I do really quick? You never know when the bottom's in or what's going to happen. We're down 3 straight weeks, but focus on insider buying. And it's not the end all, but again, just like I said, when you have an inverted yield curve, doesn't mean you're going to have a recession, even though everybody says that. It's an indicator. But when you throw it in with so many different things, right? If you look at insider buys, it usually means the stock is near a bottom, I think, right? Most of the time. When you see that, especially depending on the insiders who are buying, not just a fund, but if it's the CEO, the CFO, these guys know the company the best. That's a company that I want to check out. See what they did last quarter in earnings. I mean, did the company kill it and still down 15% plus because of market conditions? Nothing company specific. That may be a good name. You want to take a 20% position in case it is the bottom. Again, we don't know. I think it's going to go lower, it could go high. I don't know. We know Trump can't go into election year with trade up in the air. People vote with their wallets. He knows that. So I can't see us not having a deal done. I mentioned earlier, China's crazy to make this a long-term problem. And cutting off their biggest consumers instead of just doing the right thing and stop stealing intellectual property and make trade fairer just seems like a lot to give up, considering China will fall into a depression without demand for their products from the U.S. So, a deal will get done eventually. So again, you just want to pick away at some names, maybe a couple of different things. Look for insider buys right now. You're seeing a few of them. Might be a way to pick away, but be very, very careful here. Don't buy gold as a safe haven. It's not a safe haven. Hasn't been for over 2 decades. I suggest buying staples with high yields if you feel the need where I don't want to go into cash. Maybe you want to earn a little bit of a yield. Say with utilities, and also focus on companies that reported strong growth last quarter whose shares are down since reporting. So guys, if you want to find out more information about this podcast or our newsletters, you can simply go to curzioresearch.com. If you have absolutely nothing to do and you have 5 minutes to kill, feel free to go to iTunes and rate a Wall Street Unplugged podcast. Always welcome your feedback, positive or negative. I'm here for you. I say it all the time, and I mean it. I want to make this the best financial podcast out there. We're doing great, getting more listeners, getting more viewerships. It's awesome. But to do that, we have to, as a company, listen to our customers, listen to what you guys want, some of the guests that you want. So feel free to email in, and also feel free to post those comments on iTunes. Again, positive, negative, whatever it is. I really appreciate it if you post a comment on iTunes. So guys, thanks so much for listening. A lot we covered, a little bit long podcast, but I thought it was pretty good. There's so many different topics. Remember, love you guys. Really appreciate all your support. I'll see you in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.